If we break down these investment terms into everyday lingo, into everyday words that we use, you would better understand what it's all about. And so you're more likely to invest and accelerate your income, because at the end of the day, it's not about working harder, it's about working smarter, working smart. Today, we're going to be focused on ETFs, Exchange Trade Fund. We're going to discuss what it is, what's so special about it, why are people all about ETFs now, the pros and cons, and for those who are interested, ETFs every beginner should have. All right, let's go. ETFs are a bundle of different investment items, stocks, bonds, golds, and they're all from different areas, different fields, different sectors. I'm trying not to use investment words sectors, different fields, different areas. And so they're very diverse. You could buy individual stocks from every company or bond and whatnot, or you could buy a portion of this bundle. And buying a portion of the bundle gives you some ownership of every single item in that bundle. So think of it like pizza. You could buy an individual slice of every pizza you want, cheese pizza, pepperoni, and whatnot. Or you could buy a slice of this huge, massive pizza that has every topping you could possibly want. So that slice gives you a portion of every single topping on that pizza. Buying a portion of a prepackaged bundle is a lot more attractive than buying individual stocks and all that, because it spreads your money out into different fields, into different sectors, and having your money spread out into different sectors makes it a lot less risky than buying individual stocks. Should one field go down, should they have a loss, the other field can help mitigate that loss. Because when it comes to investing, it's not a matter of if there are losses, there will be losses. So having diversity helps reduce your exposure to losing a lot of money, because as one goes down, the other can be up, and so you stay a bit more balanced. A professional usually determines what goes into this bundle, what makes up the bundle. But with ETFs, rather than having a professional determine what goes into the bundle, it simply mirrors an information we already have, data we already have, like the top 500 companies in the stock exchange or the top 100 non-financial companies in the stock exchange. These are data we already have, and based on that data, it determines what goes into the bundle. This data is called index. It's an index. So rather than having the professional determine what goes in, the bundle goes, this is a top 100 companies. Well, those are the stocks we're buying in this bundle. Is a pre-packaged bundle of the top 100 companies or the top 500 companies in the stock exchange. You buy a portion of that, and now you own a portion of the top 100 companies in the stock exchange. Since it's not a professional who puts this bundle together, we do not have to pay the professional for his or her services, thereby making it cheaper. And because investing has been going on for quite a while, we have records showing that just following this preset data is just as successful, and in a lot of cases more successful than the professionals who put together a bundle. ETFs are not the only bundle of assorted investment items. You have mutual funds, you have index funds. What makes ETF special and gives it its name is that your portion of the bundle, you are free to trade throughout the day. You can sell, get your money at any point throughout the market day. Unlike index funds and mutual funds, where you also have a slice of the pie, you also have a portion of the bundle, you can only trade those once a day, and it's based on whatever the value is at the end of the trading day. But with ETFs, you are free to trade throughout the day. That's why it's called the Exchange Trade Fund. ETF is pretty much giving you the best of both worlds and then some. It's giving you the diversity that comes from mutual fund, because we have an array of different investment items in a bundle. It's also giving you the low cost benefit of an index fund, because a professional is not putting together this bundle. We're just following a set of data, but now it's giving you extra in that you can buy and sell your portion of this bundle at any point throughout the day. So what is the con of an ETF? Well, because you can buy and sell throughout the day, it opens the door for emotional trading, emotional decision. You hear news and you really just want to sell before you lose more money, and boom, you sell just because you can. Now, if you couldn't and your emotions are high because you're afraid you'll lose money, at least you have some time to think it through, right? But with the ability to sell, buy and sell throughout the day, to trade throughout the day, it does leave the door open for you to do so. Other than that, there really isn't any major con to an ETF. If you're into long-term investing, you can just buy it and leave it alone, right? Regardless of the news, you can buy it, leave it alone. ETFs are very attractive to day traders, those who are into short-term gains or into day trading. We've all heard index funds are the best way to go when it comes to investing. Warren Buffett, we've all heard about just put your money in index and leave it alone. So if that's the case, what's the point of buying ETF? If it's following the same data that index fund is following, then what's the point? There really isn't, especially for those investing for retirement, or you don't plan on touching this money for another 10, 15, 20 years. Then it really doesn't matter if it's index fund or ETF. If they're following the same data, they're buying the same top 100, then it doesn't matter if you're doing ETF or index. There are ETFs for pretty much every field, every sector of the market, and it's not uncommon to see different ETFs following the same set of data. So for the top 500 companies or the top 100 companies, you could have a Vanguard ETF, and you can also have a Fidelity ETF. Even though they're following the same set of data, they are still different in its own unique way. In one, the fee could be different, but also how much they mirror that data, how much they follow that data. One may be following it to the T, one maybe just 80% is identical. So it's not uncommon to see similar ETFs, but they're not always exactly the same to the T. Let's talk about what to look for if you were looking into buying an ETF, how to pick one. The very first thing you want to look at is the holdings, the composite of the ETF. The good thing with ETF is on a daily basis, they release information on the companies that make up the bundle. So take a look at that, and you can also see what percentage of the bundle each company makes. So depending on your preference, you may be okay with the fact that only two companies in this bundle is shouldering 50% of the bundle. You may be okay with that because really that's what you're interested in. Or you may not be okay with that because you don't want to have such a risk where should these two companies tank, a big chunk of your money is lost, or should one of those two companies tank, a big 25% of your money is gone, right? You may want to spread it out some more, and so you may go with a different ETF where the companies have a lot more balanced portion of the bundle. One more thing you want to look at when you're picking out an ETF is the expense ratio. Expense ratio is just the fees. It's a fancy word for fees. Optics, pictures, fancy words. Take a look at that. Now with ETFs, they're generally low cost. They're generally 0.1%, zero point 0 something percent, so they're already not expensive compared to 1%. That's why people like it. But you still want to be aware of how much it costs, and you get that from the expense ratio. The fees should not be the end all be all, right? Because at the end of the day, I think if you're getting good service, there's nothing wrong with paying fees, right? A 0.1 is not the reason why you don't choose an ETF and go with another one that maybe doesn't perform as well because it's 0.04. Talking about performance, you can also take a look at how the bundle has done over the last 10 years, over the last 5 years, over the last 12 months, and have that help you make your decision. Now, I personally feel as though we're in a time now where factors are so different. I personally don't think performance over the last few years is a good indicator, but it still helps. That's just my thing. I just feel like we're the ones setting the new data now, and so we can't really fully rely on the past. And generally, just because an ETF has done well over the last 10 years does not mean it's not a guarantee. It doesn't mean it will do well in the future, but it's still a good way to help you pick a good ETF. I personally love ETF, but I don't see any big deal between it and index fund because I know I'm into investing for the long run. It's not for money I need today or tomorrow. It's for the future. But I love it just so I can maybe buy here and there to sell and make small money, small change. What you start learning with investment is, small money in a short period of time gives you small money. Small money over a long period of time gives you a lot of money. So short term is you're not really getting rich off it, right? So it's really what I get satisfaction in is that I know what it is. I know what ETF is, I know what mutual fund is, I know what index fund is. So when I'm having that conversation or when I hear the news, I understand what they're saying. Now, if you still need further explanation on Investing 101, go ahead and watch this video, and that will help. I focus more on just the basics with that video, and that could help you a bit. In the future, I think I'll do a video, even though I've pretty much said it here, but I think I'll do a video just summarizing all three between mutual fund, index fund, and ETFs. And I will be doing more videos discussing other investing terms, because I truly believe if you understand the terms, then you're more likely to invest and take advantage of building wealth. All right. If you've enjoyed it and this is your kind of thing, give me a thumbs up, and I'll see you in the next video.